This episode is brought to you by Marqeta. Payment programs that scale and customer experiences that inspire. Don't sacrifice one for the other. Choose a payments provider who can deliver on both. Choose Marqeta. Learn more at marqeta.com/FTT. Hello, and welcome back to another episode, the second episode of the new Facing Credit show here on the Fintech Takes podcast feed. As you know, here on Facing Credit, our goal is to just talk about everything happening in credit and lending. And I feel like oftentimes when we're talking about lending, we focus on the loan origination process. Or maybe when there's times of economic stress, we may shift our focus later in the process and start to care more about loan servicing or collections. Rarely, I find, do we spend a lot of time thinking about marketing and customer acquisition, but we really should. Everything in lending sits downstream of acquisition. And how you acquire customers and how much you spend to acquire customers has an enormous influence over the performance and profitability of your portfolio. And today, at this moment, lenders' acquisition strategies and tactics are in a tremendous state of flux, thanks to the disruptions that AI has introduced into the world of digital marketing. I wanted to talk about that disruption and what it means for lenders, and I really couldn't think of a better person to do that with than Caro, author of the Free Toaster newsletter and creator of the Free Toaster podcast. If you're listening to this podcast and you're not already subscribed to the Free Toaster, I need you to do me a favor, pause this right now and go to thefreetoaster.com and smash that subscribe button. Okay, are you back? Good. My conversation with Carlos was a delight, and rest assured that he will be a regular guest on the Facing Credit podcast because the insights that he dropped on digital marketing and how lenders and affiliates are responding to the changes introduced by AI were fascinating. It kind of brought me back to a different stage in my career when I used to spend more time in marketing and even spend time on things like search engine optimization. So it was fun to dust off those old thoughts and kind of return to that world. So without further ado, here is my conversation with Carlos Caro. This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go. Okay, making his debut appearance on the Fintech Takes podcast for our new Facing Credit podcast show. Carlos, thank you so much for joining me.
Yeah, excited to be here, Alex. Great to see you.
It's great to see you too. I believe the last time that we spoke, we were actually together in person, but I have long been a fan of your work and your coverage of the lending and sort of marketing acquisition space and the little niche that you call home. And it's a perfect fit, actually, because I feel like everything has changed, maybe since the last time we spoke even. And I want to talk about some of those changes and what they mean for lenders. Are you ready?
Yeah, I'm excited to dig in.
Okay, all right. So let's start by pinpointing when the problem started. And when I talk about the problem, I'm sort of framing this as, we've spent like 10, probably closer to 20 years now with a relatively stable digital acquisition ecosystem. And I'm not going to say nothing has changed or there haven't been evolutions, but I feel like, really since kind of the advent of Google search engines, search engine advertising, social media, we've developed this set of tools that marketers can use fairly reliably and fairly predictably to acquire customers. And then all of a sudden, if you rewind back to, I think, about September of 2023, stuff started to change. So why don't we start with, I think, what Google called the helpful content update. What was that?
Yeah. So in brief, I think Google was cleaning up a lot of bad behavior that was happening in the industry.
Okay.
And I'll just give you some perspective from my seat. Operating through those years, you gave it a 20-year span. That feels about right to me.
Mm-hmm.
In that 20 years, we had mobile come in, we had social come in.
Yeah.
But the core for most internet publishers has always been Google. I think it still is for many of them. And as a media buyer, I'm going to take you back to like 2012, where I was buying media at a technology company. This was actually outside of fintech, but it just illustrates what I think Google was trying to address with that update. I was buying traffic from, call it 100 or so affiliate publishers at the time. So I got to see a wide range of styles, content quality, and performance on the business that I was buying for and representing at the time. And they split out the world into two halves. There was what I called the SEM based affiliates and the SEO based affiliates. And I was kind of new to, and I was trying to understand and unpack what is actually going on there.
Yeah.
The SEM affiliates, think of these as like math people, right? Very good at arbitraging, buying a click for $1 and selling a click for $1.50. Right.
So this is SEM, search engine marketing. They're buying ads to get traffic, and then they are reselling it at a premium to someone else and arbitraging the difference.
100%. And in the context I was in, these were like review sites.
Oh, sure.
So they would review 10 products in our category. They'd list them, and their advantage was they could monetize that click that came from Google 10 different ways, because they had 10 different companies on the list. Each one spoke to a different user type, and someone would click on one of those ads, and they would sell that click to a brand that wanted that traffic. So it was actually pretty easy to arbitrage SEM back then. It was even better in 2003 when the market wasn't as dense on Google, but in 2012 it was pretty good. It was a good time to be an SEM arbitrager. And then the SEO guys, I learned, were earning their traffic for free, quote unquote, for free from Google, right? So these folks were writing articles and earning Google's trust to land on page one of the results.
And they would get organic search results, and then they would find ways to monetize that through.
And I'll call organic, again, I'll put that in quotes, organic. Because I started digging into these affiliates, and I would notice just various ranges of scale. Like some of those publishers would generate tens of thousands of leads. Others would only generate a couple hundred. But I looked at the content on the pages, and I couldn't see any discernible difference, really. I didn't know much about SEO at the time, but I'm like, why is this company 100 times bigger than this other company? Looking at their content, it's more or less the same. They're comparing products. They have customer reviews. What the heck is going on? And that's when I got into the world of backlinking and tagging and all these games folks were playing to basically reverse engineer the algorithm, right? That's what they were doing.
Yeah. This was the world I grew up in. This is my first job, actually, was doing SEO. So I'm very familiar with this world. Yeah.
So you probably know this way better than I do. But that's when I learned, okay, this isn't really about how good is the content and how trustworthy and how authoritative is the content. Although I will say Google had very reasonable, I guess, frameworks. So if you were backlinked from a trustworthy source, that counts more than a backlink from someone whose site was stood up yesterday. So if you kind of look at the rules, you're like, okay, this actually does make sense at a surface level. But then when you started to see what these SEO affiliates were doing, hundreds and thousands of pages with no real value to the customer that lived on the domain because it helped them rank. And they would play games like republish articles that were written 2 years ago with today's date because they knew Google would look at the published date. And it's shenanigans, right? A bunch of shenanigans.
So again, organic in quotes.
Organic.
Yeah.
And the reality when you dug into it is, and I think actually NerdWallet, we'll get to them in a little bit. Yeah. Hopefully, I'd like to talk about them because we
will for sure.
NerdWallet's a great example of an institution that played this game extremely well over the years. And if you look today, you'll find hundreds, thousands, maybe even tens of thousands of articles that they've written that are actually extremely helpful. They answer questions about travel and about redeeming points and I bump into their stuff all the time as
Totally.
a consumer.
Yeah, me too.
But they, as I was studying their business, I was at Credit Karma, as you know, for
Yeah.
many years.
Yeah.
And one of the things I was curious about is, how does NerdWallet get such good ranking on Google?
Sure.
And a lot of it comes down to backlinking and tagging and having lots and lots of writers. And when you study how to do that at scale, it's actually quite expensive. This isn't one guy on a keyboard optimizing a couple articles. These are armies, hundreds, thousands of people that, when you actually do the math, is comparable to what brands were spending on SEM.
Right. It's just a different way to kind of dominate, but it's like the investment's the same. It's like, do we want to buy ads and arbitrage it, or do we want to pay content writers and SEO optimizer magicians to get us to rank? But roughly, it's
That's
the same
exactly
investment.
right. That's exactly right. So if you did the true math on what it costs to earn a click or a visitor, I actually don't think it was very different between SEM and SEO. And it would make sense to me that the markets would kind of clear at similar rates.
Sure. Yeah. They kind of find their water level.
At the end of the day, it's attention on Google. That's what you're getting.
Yep.
And you can get it the SEO route or the SEM route. And back to your question, that helpful content update from September 2023, I think Google was recognizing at the time, man, this AI answers first approach is going to be huge, right? And if we're incentivizing our publishers to do this SEO gamesmanship, rather than to genuinely produce incredible content that's helpful, that's well-grounded, that's authoritative, that I can use to present great answers to my customers, I'm actually kind of missing the ball completely. So, in my eyes, that's what they were trying to accomplish there, is to kind of clean up kind of what I'll call the tail of the internet that just wasn't designed to help users or humans. It was designed to play a role in this SEO game that they created. And I think they realized we need to kind of set a new foundation here.
No, that makes sense, right? So it's like basically a way of sort of putting it in a historical context would be to say, like, Google comes out, in the late 90s, early 2000s, and it's this like magical, oh my God, I can find stuff on the internet. This is incredible. And most of what they built their search engine for originally was, we're just going to rank the most authoritative, best content and help people find that. But as digital commerce and digital advertising and digital marketing really became the business that everyone wanted to be in, right? And there's NerdWallet, who you mentioned. I think HubSpot may come up a little later. They're an interesting example of a company that basically built its whole brand and its whole thing around, taking advantage of creating great organic content. But when you start doing that at scale, you start to have a bunch of people who start to kind of hack a little bit around the edges and go, well, we could spend time to just create the absolute best content, or we could pay someone to write 25 articles instead of one great article. And we just happen to know that writing 25 great articles and posting them in this sequence with these keywords will have as much or greater an effect on our ranking than writing organic content. And Google, and I know this for a fact, having worked in SEO a million years ago, they would play kind of a cat and mouse game with SEO where they would we'd release a new version of our algorithm. It would sort of break some of the like hacks that the SEO folks were figuring out. They would then figure out how the new algorithm worked, and then they'd come up with a new set of hacks. And it was kind of this back and forth thing. But you fast forward to 2023, and as you described, the context is very different at this point. 2 decades plus of like this behavior has kind of built up, but it's almost like plaque on your teeth, right? It's just like it builds and it builds and it builds over time, and eventually it kind of becomes a little too much. And at the same time, Google is staring down this existential change in the way that people find information, which is the rise of these AI chatbots. And so the helpful content update, if I'm understanding you correctly, is like, we're going to clear all the plaque off. We're going to kind of reset. And our goal is to create a foundation where we're not rewarding people who are hacking their way around the edges. We're trying to make sure that the genuine content rises to the surface. But, and this is what I want to get the next chapter of the story figured out here, the context in which that information is surfaced now also changes because they introduced the AI overview section, which I think anyone who's alive, essentially, probably knows what I'm talking about because we all use Google. This is the box that's now at the top of the search results, the most valuable territory on Google's search results, that basically just gives an AI generated answer sourced from all of the information that Google is indexing and just answers the consumer's question right there. What has been the impact of, I think you described it in an article you wrote as the zero click era that we're now in?
The impact here is wild. It's just wild. I've been digging in. I highly recommend, and I'm not going to be able to share the exact numbers I saw row by row. I have a paid subscription to a service, and I double check their terms of service, and I'm not supposed to just be spouting this stuff on the internet.
Got it.
But I can tell you the process you can follow to see the information I saw. Mm-hmm. You go to Ahrefs or you go to SEMrush. You get a subscription, and then put your favorite publisher in there. Bankrate, NerdWallet, US News, whatever. CNN Money, doesn't matter. And then you're gonna draw the curve all the way back to that September date.
Yeah.
Maybe September 23 is a good place to start. I actually think it peaked around there, somewhere between there and April 24. And draw it all the way out to now and look peak to trough. And for many of the curves I looked at, they have not stabilized, Alex. They're still dropping.
So this is like, I mean, this is to put it in like a context that we all like learned about in elementary school. This is like meteor hitting the earth and wiping out the dinosaurs type of like change.
It's bad. It is bad. And to give you a scale, right? And I went through my list of publishers that I work with and that I help my lenders do marketing on. Mm-hmm. And the ranges were big, but most publishers were landing in like a 50% to 90% decline on organic traffic.
Oh my God.
50 to 90.
Those are big numbers. Yeah. Those are big numbers. Those are, again, to use the meteor example, those are existential numbers.
They're big numbers. The story's a little more nuanced though, because what I see, actually, first let me start with what I hear from operators in the space.
Sure.
So I talk to CEOs running these companies or heads of marketing at these companies, and they're very quick to tell me, look, yes, organic is down, but we're buying more traffic, we're investing in social, we have our own newsletter now. Like they'll spout off.
They'll give you the answers.
4 or 5 things that they're doing to recover that attention that they lost, quote unquote, from Google. And all of them kind of make sense at a surface level. But then you start to think about, okay, well, back to that conversation we were having earlier, how much is that traffic costing you relative to that organic traffic?
Yep. Well, because one thing that's nice about the organic stuff, just to pause on that for a second, is it's kind of the difference, I think, in some senses between like CapEx and OpEx a little bit, right? Where it's like your CapEx for standing up an infrastructure that ranks well organically is really big because you have to hire writers, you have to build domain expertise, you have to have an archive and a domain history that's really long and deep and just like shows like genuine like investment in the space. But once you have that, your OpEx isn't zero. You have to update articles, you have to keep your pace going, but like you've established a good foundation. And it feels like, and correct me if I'm getting this wrong, like other approaches that you might replace that organic traffic with, like this is like, yeah, we had a big CapEx spent because we built like a headquarters building, but now that it's built, like we're reaping all the benefits from it. Well, okay, my building just got hit with a meteor, so now I'm like replacing this CapEx spent. I either need to spend more money CapEx wise to build a newsletter or build like more direct relationships, or I need to play in other channels. And this is, I think, where SEO and SEM kind of differ. Like SEM, much lower CapEx, but really high OpEx because I'm just paying for traffic as I go. Is that a fair way to think about how you have to adjust?
You nailed it.
Okay.
You nailed it. The other thing I'll add that is the people that the skill set required to do SEO well is not the same skill set required to do SEM well.
Yeah.
Very different people, staff, culturally. So like, as an example, SEM, these are to steal your term, these are like math geeks, fintech nerds, right? These are people that love numbers, spreadsheets, SQL databases. They're mining information. They're using AI to find the best keywords to bid on, which words to not bid on, what should the ad be.
They're kind of like traders, right? Like on Wall Street, like they're sort of like quantitative traders that just live in these spreadsheets and terminals.
You're day trading attention.
Right. That's exactly what it is. No,
that's it. In Google AdWords. But that's a specific skill set that takes time to master. There's a lot of nuance to it. I've been myself over my career hands-on keyboards in a Google AdWords account. And after spending maybe 3-4 years in it, I only maybe got to like, good, maybe a little bit, somewhere between good and great. I was never a master on this stuff.
Right.
And I looked at what the masters were doing, and my God, they were executing things I'd never even heard of. Like they have direct conversations with their Google rep every other week. And they're asking, hey, what did you release in the UI that is kind of hidden and nobody knows about that can help me juice my performance? Like that's the kind of depth you need to get really, really good at that. So when I hear about a company, let's pick on NerdWallet, or let's use them as an example. If you're going to pivot from SEO, which you front loaded your investment on, to your point, many, many years ago, and you're reaping the rewards of that today, and you're pivoting quickly into SEM, your return on investment is going to be lower there than it was on SEO.
Yeah.
It just has to be.
Well, no, that's exactly right. And I guess to use NerdWallet as our example, like they've talked publicly about the impact this has had. And again, as any good, smart public company will do, they'll frame it in the like most gentle, this isn't a problem, we're all over it kind of language. But what have they shared publicly about the impact that this change has had on their business?
Yeah, it's interesting. The high level story is still a positive one at the company. So their last earnings report, I'm going off of memory here, so I might be a percentage or two off, but on the order of 24, 25% increase in revenue in the most recent quarter compared to the same quarter last year.
Okay.
That was their headline. So like, okay, that sounds pretty good.
Yeah.
The business I'm closest to in my consulting business, and I have kind of more depth in, is credit cards. And I took a look at unpacking their earnings. Credit cards was down 25% year over year.
Yeah.
25. Okay. So it's a big number.
Yeah.
Especially considering other publicly reporting companies in the category. Credit Karma comes to mind. Credit Karma has been steadily growing their top line over the same time period. So that along with many credit card clients that I have also growing through that time period told me, this is unique. It's different. This is not an industry thing. This is kind of a SEO exposed publisher type problem.
Yeah. Well, and again, I want to get into that point, right? Because I think like NerdWallet's the perfect example to use, right? Because as we've talked about, and I followed them for a long time, like they built their whole business on, we are really good at creating, and genuinely, like they create really good content on this stuff, right? Like, so their stuff, I think, and obviously they use the dark arts of SEO like anybody else does, but I think it's built on a foundation of like really great content. I've always thought they've done a good job of kind of blending like editorial and advertising together in a way that still maintains a relatively strong value prop for users who are like using this content to make decisions. They were, to use your language, like SEO exposed. That was the whole foundation of the business. That was the big capex that they spent over years that then they translated into success when they went public. So this, I imagine, also is a problem for others in the space. And I'm wondering if you can kind of give us a little bit of the lay of the land specific to lending. Like who else is SEO exposed? Like if you look across like the landscape, like which vectors jump out to you as like, ooh, they're going to have a problem. This might start to manifest over here. Like, is it just certain aggregators like NerdWallet? Does it include also like lenders directly that might have been running like SEO strategies? Like who's getting impacted by this?
Yeah, I mean, I think everyone's impacted on some degree. So I'll go kind of through first order impact and then kind of second order impact, because I think there's there's some connection back. I'd imagine a publisher like Bankrate is going to be SEO exposed here.
Yeah.
They were among my list of publishers I checked, and as expected, we're seeing big declines.
Yeah.
A publisher like Karma or Experian that has native apps, that has authenticated users that come in to check their scores on a regular basis,
Yeah.
that don't go through Google to find them.
Mm-hmm.
Maybe they go through Google to find them initially, but
Yeah,
once
sure.
they're members, they have the apps on their phone and they can check. Those businesses actually don't even feel exposed at all to this.
Yeah.
They feel relatively like they're not impacted in a negative way so far. They could in fact be beneficiaries here if there's consolidation opportunities later.
Right.
If some of these businesses that are struggling say, you know what, maybe a Karma or an Experian's user base could benefit from some of the assets I have, whether from a brand perspective or a distribution perspective. So I do expect some consolidation to happen here. The long tail, I'll give you maybe.
Sure.
There's a set maybe of 20 to 50 publishers that promote credit cards, personal loans, auto refis, that sort of thing. I think it's hard for me to come up with a name that isn't somewhat exposed to this.
Sure.
Because what's happening now? The folks that were sitting out SEM, the nerd wallets, now they're attacking SEM hardcore.
Right.
They're bidding against me. So even if I wasn't an SEO player, I was happy playing my SEM game.
Yeah.
30 new competitors just showed up, bidding me up, and I have to compete with them. They might have dropped me off of page one, so that there's a squeeze happening on SEM.
Well,
so
it's kind of like the analogy would be like Money 2020 is coming up, and so I've been sort of mentally preparing myself for spending a lot of time in a casino. But it would be a little bit like if suddenly the odds in blackjack got like 1,000 times worse, and all of like the whales that spent all their time playing blackjack wandered out of that section of the casino and walked over to craps, and all just like joined that table. Like suddenly like the people at the craps table were like, okay, well, hang on, wait, we we were sort of happy with what we had, and now like there's all these other people over here. Like it changes the nature of the competition.
That's it. It changed the nature of the game completely. And
that's interesting.
So now we have the SEM guys having to compete with a longer list. But now think about the auction from a lender's perspective.
Yeah.
If you were a lender buying traffic in Google, and you were competing against, say, 3 big marketplaces that were bidding on the same keywords you're trying to find, high value rewards, cashback credit cards, whatever, keywords like that. Let's say you're Capital One and you're bidding on cashback credit card.
Yeah.
Now I would expect the auction in Google to look very different than it looked 18 months ago. And the big question is, who has the edge now? Is it the marketplaces that can monetize the click on 50 different products and have a matching engine that connects the user to the right product? Or is it the brand that has fewer choices but much more lucrative unit economics when someone does decide to buy? That's always been the game between marketplaces and individual lenders. Lenders can afford to pay more because they make more per sale.
Yeah, sure.
But affiliates can afford to bid more because they can offer more choice to the consumer.
So the concept is basically that like if I'm a lender, I kind of have 2 choices, right? One is I can go to these affiliates who are now competing in Google AdWords for these users, and I can essentially pay a premium on that going through them to get there. And their game is, if I get someone, I have a lot of surface area I can sell products to this user on. Or if I'm a lender, I can say, I'm just going to go to Google directly. I'm going to compete here, and everyone I bring in, my conversion rate is going to be high. I make a lot of money directly, and so I have a lot of margin to play with. But now my level of competition is going up because now all of these folks who were doing organic are now coming over and spending in AdWords. So like the nature, the dynamics of that Google AdWords competition are completely different.
Very different. Yeah. And I'll throw another wrench into this.
Yeah.
Which now I'm speculating. I don't know how this is going to play out.
Sure.
Because it's in Google's vested interest. Mm-hmm. They're $1 trillion company. I think they're going to find a way to solve this problem.
Yeah.
But you start thinking about zero click, like these AI based answers. And I'm getting used to, as a customer, getting my summary. Yeah. I ask my question to Google. I'm out. I'm not clicking anything.
Yeah, that impacts ads too, right? That was my next question.
That's where I'm going with that.
Yeah.
Is if I'm not clicking anything,
yeah,
does it matter if it's SEM or SEO?
That's exactly, like, I was kind of thinking about it from the user perspective, because I'm the same way. Like, I go to Google and I get the answer and I'm like satisfied, and then I leave and I don't have to put it in a traditional bank context. Like, I don't have to walk into the branch to get an answer to my question and then be bombarded with cross-sell offers between going in and walking back out. Now I can drive by the bank, see the answer on the outside of the building, and never stop in and like give them the opportunity to sell to me. And so it completely changes the nature of that relationship. And I wanted to ask a broad sort of question. And this gets us, I think, into the next part of what I wanted to talk about with you, which is, you're right. Google, $1 trillion company, super smart, one of the most successful companies in the history of capitalism. Why are they doing this? Because, like, I think to a degree, the clearing off the plaque after years of like SEO buildup, that part I get. Obviously, they can't ignore AI, but it does feel a little bit like, I'm trying to think of the right way to describe this. Like, you know that thing where like a person will be working in a job and they'll get these signals that are maybe accurate, maybe not, that make them think they're about to be fired. And so rather than waiting to be fired, they walk into their boss's office and quit. And it's like, you can't fire me, I quit. And then the boss is like, I wasn't actually even going to fire you, or maybe I was, but it wasn't going to happen for a long time. It feels a little bit like Google walked into the AI offices and was like, you can't fire me, we quit. And they're like kind of harming their existing business out of a fear of what AI might do. But by doing that, they are accelerating the process towards that inevitable outcome. Do you have a sense of like the larger strategy here?
I don't. But I love speculating. So
yeah, me too. That's what we do. Yeah.
Actually, one comment I'll add before I'll give you my take is I spoke with a CEO friend. He runs a publisher business, and a close friend of his. So I'm hearing this third hand now.
Sure.
So not so this is pure rumor mill thing. But I found it the soundbite was just juicy, and I wanted to share it.
Yeah.
The soundbite was from someone he knew that was well connected to the senior team at Google.
Yeah.
Okay. And because he's been kind of complaining and moaning about his own traffic coming down and all of that. And what the person said is, look, I know you're grumpy about the decline. I get it. But if Google wanted to kill every single publisher tomorrow, they 100% could, because they know how powerful this AI answers thing is. They know consumers like it. They know it works.
Yep.
They're actually just letting the ecosystem hang around and adjust.
Yeah.
This is adjustment period time, right? So yes, it's come down, but it's not zero. And we have some answers, and SEM's still live. So
like, if they wanted to rip the Band-Aid off, they could.
They absolutely could.
Yeah.
They absolutely could, because they see what's happening with OpenAI and with LLM-based search and all this. Okay.
Yeah.
So Google is appearing to me that they might have the DNA of a company that is willing to disrupt their own business because they know what's coming is bigger than them and is completely out of their control, right? It's like what Blockbuster was unwilling to do when they heard about Netflix, right?
Yeah. Yep.
Blockbuster was like, that's bullshit. That's never going to happen. Whatever. Good luck, Netflix. We know how that story ended, right?
Right.
Google might be savvy enough on this to say, you know what? This AI thing's inevitable. It's going, like, clearly consumers prefer just getting a straight answer on a question rather than deciding which of these 10 blue links to click and then reading more content. That's kind of bullshit compared to where we are now, right?
Yep.
So let's lean in. Let's earn the trust of the consumer.
Yep.
Let's not let OpenAI and others eat our lunch.
Yeah.
And let's figure out how the hell to monetize this tomorrow, next year, whatever. We have deep enough pockets here to kind of fuel this if I were to speculate, that's what I think they're doing.
Yeah. Well, because
how that met. Yeah.
Well, no. So to build on that point, I mean, I think it's a good way of thinking about it, right? Where it's like we have tons of money in the bank. We can kind of afford to keep a foot in both worlds until like the path forward becomes more clear. But as you're saying, like the thing we want to avoid if we're Google is I don't want someone coming to Google and being like, can I just get the answer? And then going over to ChatGPT and just getting the answer, right? Like you can't have an experience that's that different, or users will just sort of find themselves in one place rather than the other place they're used to going. And so the AI answer box at the top of the search results is sort of a way to keep users in the habit of going to Google first to get answers to their questions while not completely submarining their existing business. Is that a fair way to summarize it?
I think that's it. I like that summary. The other thing I'll add is it's not hard for me to imagine within like an AI answers first world that you could still sell ads in that environment, whether it be direct marketing like a PPC type of model or even brand advertisements, right? Like there could always be a rail on the right side. And this is going back to like the old days of the internet where you would see banner ads for brands that are related to the search you're making. I don't think Google does that anymore. They're pretty hardcore on the blue links, but for a while you would see banner ads with logos and images of companies that we're basically buying ad real estate just like
digital
they would on
billboards.
a billboard.
Yeah.
That's it. That's it.
Mm-hmm.
So I could see I could imagine a number of different ways this plays out. I have a hard time imagining a AI search world where there's not paid media. Like, capitalist society and structure is just so hardwired to let sponsors come in on any kind of attention. And I mean, I don't know if you do this on your podcast, but I already have sponsors on my podcast and I haven't even been running for a year. Like it's just not that hard to get a sponsor behind any kind of content these days. Like the markets are just so liquid and totally. Fluid.
Yeah, no, I mean, like the market for attention is the market, right? As you were describing before about day trading and attention. I mean, it is the market that everyone ultimately cares about. So I want to talk about what publishers and what lenders are going to do. And we are going to circle back to the AI sort of answer and kind of the AI chatbots and what that looks like. But before we get there, you wrote an article on the SEO apocalypse, as you described it, which everyone should go read because it's an incredible read. And we'll drop the link in the show notes. And you advised that there were a couple different options that lenders could look at or that lenders are already starting to look at. One, and when I say lenders, I mean lenders and then the affiliates who are trying to sell to lenders because we can kind of, I think, group them in some senses. One is to, as you put it, go native, right? Which is to say, put their content directly in the channels that Google might have ultimately been directing users to. So like, we have YouTube, we have TikTok, we have Reddit, we have any number of sort of smaller communities out there on the internet. And my question for you is, what have you seen in terms of the usage of those channels for consumers as a place to go get financial advice and product recommendations? Because when I think about it in the context of like a NerdWallet, I think in some senses NerdWallet was started because communities for financial advice on places like TikTok and YouTube didn't really exist when NerdWallet was first starting, and so there was kind of a gap in the market. But like if I'm a Gen Zer who's 18 years old, might I just go to TikTok to get my information? And wouldn't that be a different place to reach users that kind of extends beyond the reach of Google?
Yeah, I'll give you my favorite example here.
Please do.
Vivian too. You should look her up. She's known as My Rich BFF.
Oh,
right?
yes. I've heard of her. Yeah.
So I think she's former Wall Street. So I think she was like a investment banking analyst, something like that, right out of college. And she kind of learned the ins and outs of Wall Street, personal finance, and just kind of got into YouTubing and posting videos, riffing on various topics. And just that became a thing for her. And that's all she does right now.
Yeah.
And I think her following is like 5 million. It's wild. Yeah,
that's crazy.
It's incredible.
Yeah.
I assume she has a content team behind her and all of
I'm
that
sure.
these days. But yeah, she has a multi-billion-dollar business, or not multi-million-dollar business.
Sure.
We'll get to MrBeast in a second.
Yeah, I was gonna say
this is all connected.
Yeah.
But in Vivian's case, she has the trust of a very specific audience. I'm guessing it skews female.
Sure.
I'm guessing it skews younger. Probably, higher than average education. I would guess like college educated. And she's really artful in the way she does her content. Like she's great at short form, great at long form. She's in all the channels. And if I was a brand, back to the what should brands do? If I was, say, a fintech brand that wanted to get in front of that audience, I would be trying to lock down like a 5-year agreement with Vivian.
Yeah.
Right.
Yep.
And beyond that, I would actually look to her to tell me, where does your audience struggle? What are their problems?
Right.
What bespoke products could I create just for you?
Yeah.
That are exclusive to you and our brand and our relationship? How should I price them? How should I communicate? Like, there's an opportunity to pull these creators into your business, not just to promote the stuff you have, but to actually help you co-design.
Yeah.
And I don't think it's about a 3-month push. This isn't a one-time email blast that Vivian's going to do for you. It's about building over the longer haul.
Well, this is what the points guy built with the big card issuers, right? It was basically this idea of like, first I'm going to be a place that's going to review these cards or give advice. But it got to the point where, like, when Chase launches a new premium credit card, they go to him first and they consult with him on the product, right? I mean, like, that influencers can have that level of input and I guess entanglement with these brands.
Yeah, no, that's great. That's a great example. And the points guy did it, I think, pre-social media.
He was early. Yeah,
he was early. And influencers today just have so many outlets, right? All the social channels, video, writing, audio. My God, and you can, because you're a content creator, you know this.
Yeah,
you could take this podcast today. Let's say it's an hour. This could become 100 pieces of content.
Totally.
Videos, little sound bites that go into text post. Like, it's just repurposing content across all these channels. Like, you could end up, with, I don't know, 100,000 impressions on one pod that you did in an hour. So so the influencers have mastered this. The financial brands are playing a different game, right? So they're math people, they're risk managers. They know that they need to figure out the exact math on a loan, who to lend to. It's a lot more quantitative versus I view, top line brand advertising as much more of an art form than it is a science.
So this is going to be a bit of an adjustment for anyone who wants to kind of go native and work with these influencers. Is like now, well, and it is, I can speak to this actually, and I'm sure you can too, because like we're both content creators. Like, there is an element of like, you have to kind of, it's a little like dating, right? Where it's like, because as a content creator, and I don't have 5 million followers, so I can't really speak to like that scale of this thing. And we'll get to MrBeast in a second, but like that to me is as a brand, you want to be careful about who you partner with, right? It's not an open marketplace where anyone can just bid on AdWords. It's a partnership, and it's a question of like fit. And are you going to work with me to design products that are going to work for my audience? Is this going to undermine the trust I have in my audience? That's a very different conversation and skill set than finding arbitrage opportunities in Google AdWords.
You nailed it. I want to drop another big theme here because this is all related, but I think this is what I'm about to say, I think, is the core of the whole problem. lenders, and I think I'm gonna talk about fintechs here for a second.
Sure.
Fintech lenders have been around now probably let's say 15 years. I don't know exactly, but ballpark. The ones I've seen at least, and there are many I've not studied in depth, but the ones I've studied in depth have been arbitrage shops. You buy a click at $1 and you can monetize it at $1.50. They're very good at that. And they're very good at determining that they can get capital from financial markets at 8%, and then they can lend it at 17% with some losses. And net, they have some spread on the capital they can get, and they have some spread on the attention they can get.
Yeah.
It's arbitrage on both sides. That's what they're good at, right? Fundamentally, when I think about building brands and what Vivian's done what she's been able to build because her give to ask ratio is incredibly high. Your give to ask ratio is incredibly high. I'd like to think mine is incredibly high.
Yours is incredibly high. As a subscriber, I can say yours is incredibly high.
But you kind of get to where I'm going with this, right? Is these fintech lenders haven't put their toe in the water at all on playing that game, on just giving and giving and giving, whether it be through content, whether it be through advice, events, free stuff to offer your audience. Like, that's how you build loyalty, trust, influence, attention. The problem with that, though, is it takes forever.
It's so funny that you mentioned this because, like, I was just having this conversation with someone else about, like, ironically, that's actually what, like, community banks are good at. They have a good give to get ratio, right? Like,
I think they do.
It's funny that you talk about it this way. It is better because it's like fintech lenders, I think you're right. Like, they came, and again, that's why I talk about this 20-year period, right? Like, they came into the market at a time when all the tools existed to just arbitrage your way to a good business. And I think in some senses, what's happening is those arbitrage opportunities are getting wiped away, and the ones that are remaining are vastly more competitive because everyone's piling into them. And what's left is this very kind of, I think, to quantitative people who live arbitrage day in and day out, it feels sort of like almost mystical and like strange, where it's like, or your alternative is you can just give your audience and your customers a bunch of stuff. And by doing that, you will create loyalty. And then your cost of acquisition, your cost of doing these other things, the performance on your loans, all of these things will improve because of that. But it's such it's like a leap of faith type of model as opposed to a number spreadsheet. I push something here, it comes out here model. And it's a mindset shift for all of these companies, I feel like. When it comes to your payments provider, you can't afford to compromise. Marqeta's modern payment solutions flex with your business without the trade-offs. Stable and agile, secure and innovative, scalable and configurable. If they say you can't have it all, don't believe them. Your business demands more. Choose a payments provider that delivers more. Choose Marqeta. Visit marqeta.com/FTT to learn more.
It is. I'm going to point your audience to another article that we published in the Free Toaster. This one's December of last year. It's a little bit dated, but it did a deep dive on what the CEO at New Balance did when he came in, and he inherited a declining business, a brand that was known as the dad shoe.
Yeah.
So they were not doing well. They were spending 70% of their budget on direct performance, probably SEM, Facebook type of stuff. Only 30% on their brand. And he said, that's broken. That's backwards. We need to flip it. We need to spend 70% on our brand and 30% on direct, because our image is our problem. People see our ads, but no one wants our damn stuff because it's not cool. It's not sexy. It's not hip. So he signed deals with influencers who would wear the shoes, and it took him 19 months to turn this thing around. So for 19 months, he spent 70% of his budget on brand, and the business declined through that whole period.
Totally.
So it's wild. But he had a CEO behind him that believed in his vision and what he was trying to do. And I think they've been growing ever since. But that's the muscle I don't see a lot of fintechs having today.
Totally.
And if they're going to build, and if they're going to grow 20-year, 50-year franchises, I think it's muscle they have to build. But you can look at the SoFis of the world. I think do good. They have stadiums. They're spending money on brand.
Yeah.
So not to say there aren't exceptions.
No, sure.
But it's certainly not the fair way right now.
No, I think that's true, and I do wonder if like we will also see non-lending fintechs that are getting into lending in some senses be better at this, because the non-lending parts of fintech were always more brand oriented than they were arbitrage oriented, because you can't make money the same way. And so like if I think about a Chime or a Cash
I was going to
App,
mention them.
or
Robinhood,
like they're great at brand because they've had to make money in ways that don't allow this like sort of magic arbitrage machine. It's so funny, but it's like the more you kind of think about it, the more I do kind of think that, and maybe this is a piece you and I should collaborate on and write at some point, but it's like how the 20-year golden period of digital marketing sort of screwed a bunch of companies up. Because like, even, do you remember that story about I think it was an ex-marketing person from Nike complaining about the direction that they took Nike as like digital performance and doing all this stuff and kind of getting away from brand. Like, I do think in some senses when you make digital marketing too easy, or marketing or customer acquisition too easy in general, or too sort of deterministic, it kind of removes this muscle that we're talking about. And so I think it makes a ton of sense. I want to ask you, before I let you go, about the second recommendation you made, which is building with audiences directly. And we know of several brands that do this well, right? Credit Karma does this well. There are, I'm sure, some examples of like lenders or others that do this well. But can you kind of describe, like, if you're building your audience directly as a brand through mobile apps or through a newsletter, an email list, or creating user accounts and putting valuable tools behind it, like, what does that strategy look like? And how do you think it will sort of change or evolve or become more popular as we sort of move into the zero-click era?
One way is I'll share what I saw MoneyLion do recently.
Oh yeah, sure.
And they just straight up collaborated with MrBeast. They just said, you know what? This isn't our game. That's not what we're best at. It is what you're great at. Let's collaborate.
Yeah.
You promote our brand. You have all the channels and distribution. So that's one way in, is find partners that you feel are culturally aligned, strategically aligned, and you have them help you build those direct channels. The much harder way, but the more sustainable, durable way, is you have to find ways to increase your give to ask ratio. How do you boost that? Right. I'll give you a small example I saw. This was actually, I was doing some thinking on like retirement planning, savings, that sort of stuff. And I just needed like a calculator. I don't want to run some numbers. What if I save X? What if I save Y? What if my rate of return is this or that? I wanted to play around with that without maybe I should have just built a spreadsheet, but I didn't feel like doing that.
Yeah.
And I actually bumped into NerdWallet's calculator. So like really nicely designed, easy to play with. And right below the calculator, there's a little thing that says, hey, want continuous updates on things that might be relative to your retirement? Sign up for a newsletter. So I thought it was really well executed, because they found my attention through Google organically. They built something of value. They expected nothing in return. It's kind of a free little thing they built. And then they invited me to get even more value through their newsletter. So that I felt like that was really nicely executed. So the question, if I was a brand, let's say I was a lender, I would talk to my customers deeply. I would do deep research on what problems do these guys have. They're obviously coming to me because they're trying to close a gap in cash flow, something like that. But what are some underlying things that they need help with? Is it employment? Is it managing unexpected household expenses? Like, what is it that they struggle with? And is there something I can offer them, whether it be content or otherwise, that is of no cost to them, that connects them directly to my brand somehow? And that could be a newsletter, it could be a podcast, it could be all sorts of stuff. It could be an event that they host in the community to get people out there. But those would be the types of things I would be doing. But I think it works best if you can actively collect information on your user base, whether it's a cell phone number, whether it's an email. I mean, I think that's why you and I do newsletters, is because we get to keep the email.
Oh,
and
totally.
if LinkedIn decided it didn't want to publish our post tomorrow, we could still talk to our audiences, right, through our podcast, through our newsletter. So I think about deplatforming a lot.
Oh, sure. I think anyone who's done creation stuff for any amount of time thinks about it for sure.
You just have to. So that's those would be some starter questions I would offer a fintech brand considering that. But there's so many things you could do. I wrote an article on Reddit communities lately. It's not something I'm strong in, but you could build a Reddit community. Those are some of those are huge.
Oh yeah.
And if you're just great at answering questions directly from the community, and people know it was Barclays Bank that answered it, but it's like a genuine user, straightforward response, helpful. Like,
yep.
You better believe Barclays Bank is
no,
not trying to sell, just helping. So, but finding ways to help at the scale that these lenders operate is hard. So I'll acknowledge that.
Yeah, no, I think it's really true. I mean, I think a couple of things based on that real quickly. One is, I think you're right about like just tools, things you can do that can just like, it takes, this would take 6 hours for one of our engineers to spin up. It's really not a big deal. We'll give someone a half a day or a week or whatever to like just build this thing. There are companies, I think, actually more on the B2B side than the B2C side.
I've seen it a lot in B2B.
Like I was thinking about Ramp is really good at this. If you go to Ramp's website, they have all kinds of little tools that you can use to like pick a name or write like a mission statement. Like they just have all these little kind of AI tools that they built. Square is good at that. Actually, Shopify is really good at that. My fun fact, the Fintech Takes logo was designed by a logo generation tool that Shopify spun up 5 years ago or something like that. And what was wild about it was I didn't even know that they had built it because it wasn't advertised as being a Shopify thing at all. It was just, it came up first in the organic search results. This is obviously zero-click era, but like I just found it because it was the best tool for building a logo. And that's the Fintech Takes logo that we've never changed. So like, I think that those kind of things can be super valuable. The other thing I wanted to get your take on real quick in this like more direct sense is I think it's interesting that some of the affiliates or lead aggregators have actually been dipping their toes in building their own financial products, which sort of feels like the most sort of like aggressive way of guaranteeing that you own your audience, right? So like Credit Karma obviously has Credit Karma Money, which is like a kind of a checking account. They already have a big sort of direct relationship with accounts and all the other stuff that they do. I think NerdWallet has even like dabbled with like we might try to launch our own secured credit card or things like that. So it would feel like in some senses, financial products are like sticky. They give you a real strong direct relationship. But I guess the flip side to that is it's also directly competitive with your advertisers in a way that might cause problems. Do you have a sense of like where the outer edges are that these companies might go to build these direct relationships?
Yeah. Let me hit on one of the things you mentioned and then add one more example. NerdWallet did launch a card. It was not a success. They shut it down.
Yeah.
Lending Tree launched a card.
I think. Yeah.
Lending Tree launched a card
in
partnership with Upgrade, I believe.
Yeah.
I think they called it the Win card. It was not a success. They shut it down. So just two tangible data points. Those are out there. Look, having worked at a marketplace at Karma for many years, having talked to these advertisers, knowing their vibe, knowing what they care about, what you just said is 100% true. So you got to pick your lane.
Yeah.
You're a marketplace or you're a provider.
Sure.
The example you gave with money, Credit Karma's Money, that's an interesting one where
it's a different lane, right? Because they don't do a lot in the bank account.
Different lane.
Yeah.
They actually don't have a marketplace for deposit products.
Right.
So they decided to be the sole provider in a category where they could have built a marketplace.
Mm-hmm.
So they actually did pick a lane. They said, you know what, here we want to own it. Here we want to be a neutral marketplace. So I actually do think you have to pick your lane. I've yet to see an example where there's a marketplace and actually maybe Amazon is an exception, because Amazon is like is their direct merchant, and then but Amazon came in as the merchant and then they added the marketplace later, I think, because they just have so much scale. But Amazon is one of the few I can think of where that does this well. Usually it just becomes like a PR nightmare with your partners. And
no,
I would steal far away from that, or at least to tread very cautiously.
No, they get a little prickly about that. And like Amazon being the exception, like Amazon's the exception to a whole bunch of rules. So like that's not probably one that you want to like try to follow necessarily. So I want to end on the last recommendation that you made in your piece about what you can do, which is I think in some senses the most interesting, potentially the most fraught with danger, but also in some senses probably the one that's inevitable that everyone's going to have to get good at, which is what you called GEO, Generative Engine Optimization. What is that?
So that is what, and I've heard this described like 5 different ways. So what it is, it's basically the AI, the LLM search version of SEO is all it is, right? So it's acknowledging that there's a science behind getting displayed within these LLMs. What do I think that science is? I'm not exactly sure. But if I was building a brand today from scratch, I would probably from day one have a team whose job was to do nothing but follow OpenAI and Google and Perplexity, all those big search engines, and help me understand how they decide what content to display to the customer. Particularly with as it pertains to how they reference brands. Because if you're in the game of brand building, you don't just want your site to be the source of the answer. You want your site to be the source of the answer with your brand associated with it. That's the key, right? So if that's happening, you're going to get organic visits to your site. You're going to get transactions that come in through a number of ways that you can't maybe attribute directly. But you have to be visible and you have to be playing the attention game in these new engines. And that's what that is, right? And it's a very emerging science. Will it look anything like the SEO of old days? I don't know. But I do suspect there will be some gamesmanship, just like there was with SEO. There's going to be a game to be played here.
Totally.
And that's the action item: is discover the game, discover the rules of it. Mm-hmm. And the hard part here is the rules may change every 6 months.
Well, that is hard, right? Because I was thinking about that. I mean, the search engine thing was great, but like when Google sort of stumbled upon the magic formula of like backlinking as sort of being the reference to quality for an internet that's all interlinked with each other. Like once they sort of discovered that fundamental insight, everything was kind of a derivation of that, and they would tweak it and adjust it, but like it didn't change that much. The AI model one is really tough on a number of different levels, right? So one of the ones you mentioned is it's very early. So we just don't know how these things are working. It's going to take a while to discover that. The second point is that these models are probabilistic in a way that I don't even think, and I've read a lot of stuff about even people who work at these AI labs. They're like, we don't understand how it works. Like they sometimes are careful about admitting that because it doesn't sound great to be building like God and not understanding how it works, but like they don't know how it works. It's probabilistic. It just spits out answers that are sort of unpredictable by default. And then the third component, I think, is that they're constantly pouring billions or eventually trillions of dollars into constantly building the next version of the model that might behave in entirely different ways. And so there does seem like just a great deal more like quantum uncertainty in the world of AI search engines as opposed to sort of non-AI search engines. The other thing that I wanted to ask you about in this area is, and OpenAI is probably the example we should use because they seem the most sort of aggressive. They're obviously the market leader from a consumer perspective. I think they have like 800 million users or something wild like that. they don't seem content to just exist at one layer of the stack. And so I've been thinking a lot about with OpenAI, and it kind of goes to what we were just talking about with like NerdWallet launching a credit card and pissing off their advertisers. Well, I mean, like if you are annoyed by that, you might also be annoyed by OpenAI deciding that they want to be in the lending business or they want to be in a particular content business. Or like, I'll just pick on an example, even like the building a direct relationship with your customers. How difficult would it be for OpenAI to build a version of its services for consumers that just was better at every single thing than Credit Karma is good at right now? Like, oh, you need to find out what your credit score is. We can do that. You need tailored advice on how to raise your credit score. You need someone to map out a 8-year plan for how you're going to get to owning this home in this town. Like all of the questions that a Credit Karma user might bring to Credit Karma, OpenAI with very little effort would seem to be able to duplicate that. They're getting into agentic commerce, and there's talk about them eventually adding ads to OpenAI, like you were talking about. Do you have a sense of like where these like uncertainty points, or where you like if you were a brand contemplating how deep to go into like playing this generative AI game versus playing your own game, how you would think about that?
Yeah, that's a good question.
It's like it's a hard question because I don't think anyone knows the answer.
Hard question. I do have like a top level splitter that
Sure.
I think changes my answer to your question, and that splitter to me is: are we talking about a regulated industry or not?
Yeah.
Okay, and just and you're in the financial world, so I think you know where I'm going with this. But
yeah.
When I think about the kind of work I had to do at Karma, dealing with credit bureaus, dealing with banks, it wasn't always just the substance of the math problem or the analytics problem. It was also playing along with a deep awareness and recognition of all the rules that are involved in doing that specific thing well.
Yeah.
In a compliant way, in a way that's not going to get you sued, in a way that's not going to alienate your partners. That is hard. That takes decades to do that. So to your direct question, do I imagine OpenAI spinning up a Karma competitor? Man, if they pulled it off, I would be impressed, Alex, because there's a lot of nuance to the business. There's a lot of layers to it.
Yeah.
I know there were thousands of people working on it for decades while I was there.
Yeah.
And look, we didn't have the AI tool set back then. Mm-hmm. So, but I'd be surprised if it was so much of a game changer that even in regulated industries, you could just bulldoze your way through some of that.
Yeah.
In unregulated industries, I could absolutely see it. Because now you're talking, they have the attention, they might be able to get distribution and supply. Yeah, that the wheels could get turning incredibly fast in an unregulated industry. But insurance, financial services, like there's this number, health, man, I could go on. And I think if I'm in those industries, I feel relatively protected.
Yeah.
Yeah. If I'm selling widgets and anybody, that's going to be hard. Yeah. That's going to get OpenAI is going to get really damn good at selling widgets really, really fast.
Well, no, totally. I mean, like a very related, but in a different industry example that kind of plays this role of someone like an Expedia, for example, like they have to be terrified of what OpenAI is going to do for like being your personal travel agent, right? I mean, like that's going to be huge. And I do think that's a fair interpretation because, OpenAI and the other AI labs are going to basically like build a priority list, like what industry do we want to destroy first? And they'll sort of go down like the list. And financial services and insurance, it's always almost always at the bottom of those lists, because even though it's very lucrative and very sticky, there's just a lot of things that can cause you big problems that you might just want to like, oh yeah, we'll get to that 20 years from now. We won't get to that now. So I think that's a very fair way to think about it, and maybe gives companies in financial services the barest bit of breathing room to figure out how they're going to navigate all of those.
Yeah. I have one other thought for you on the LLM, like how to play that. Actually, I'll ask you this. Have you ever put a brand name directly in a search?
In like chatbot?
Yeah.
I have.
A brand name or like a specific... Okay. Why did you do that?
Because I wanted the chatbot's thoughts on that brand, but I already knew something about that brand, and so my brain sort of started there rather than starting at zero.
Okay, I'll give you an example I used recently. I asked the chatbot a specific question with the caveat that I'm interested on so-and-so's opinion on that question. Because what I've noticed, and you probably do this too, I when I research my written pieces, I'll go in there and I'll do a bunch of like preliminary research in the LLMs.
Yeah.
But I'm starting to curate now where it pulls from when it gives me information.
You're pointing it.
I'm pointing it, and that's the brand, right?
That you're making a judgment on who I trust, where I want to go, that supersedes the choice that the LLM might make.
Thank you. Because I don't always trust the source that they pick.
Right.
And I think people over time are going to start steering the LLMs into specific lanes with brands.
Yeah.
And in my business, when someone has a question about affiliate marketing, I want them to say, what would Carlos say on this?
Right.
So the LLM searches my pod and my newsletter and is like, actually, he actually wrote an article. Here's his take.
Yeah.
Done.
Yeah.
But that's me investing at the top line brand level so that I can exist within this context.
Right.
So again, all this stuff is connected, but I think the number one thing right now for attention is brand building.
Yeah.
And there's just, but actually, one other thing I wanted to add, you mentioned the example of maybe a Chime going into lending or a Robinhood going into lending.
Yeah.
And earlier I talked about how hard it would be for the arbitrage fintech to get into this brand playbook because it's such a different skill set.
Yeah.
The same thing is true in reverse. If you built your company on brand, lending is a hard business. There's a lot of quant. There's a lot of nuance.
I've made this point many times. It's like
damn hard to do. It's really easy to lose your shirt in lending.
No, it's such an interesting point, right? Because it's like it's basically like the thing that's funny is if you're on the lending side and you're going into the brand side, how do you build the artistic side of your brain to be able to do the storytelling and this value creation that you're just not used to doing? If you're on the creative brand building value creation side and you want to get into lending, are you willing to spend 2 years getting your teeth kicked in on losses and all of these like arbitrage things you don't know and build up the scar tissue to be good at lending? And so it does feel like, and I think this is a great way to end the podcast, like feels like each side is going to be trying to cross over to the other side, and whoever makes that journey from one side to the other faster is going to be the one that ultimately kind of gets there.
Or we're going to have organizations that decide to partner because they know there's superpowers on opposite sides and they join forces.
Right.
We didn't have time to talk about it, but I think that's the direction MrBeast is going.
Well, that is a topic then for a follow-up podcast. Carlos, first of all, thank you for joining. This was great. Felt like we've been doing this podcast forever, and this was the first one. But hopefully you'll come back for future conversations. Can I book you for a future episode? Okay. I will do it. Everyone, make sure that you are listening to Carlos's podcast. Subscribe to his newsletter. We'll drop all the links in the show notes. But truly someone I rely on to get smarter on this stuff. And thank you for your time. Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.